right, guys, here to help us out, the investment pros, Matt, Danny, and Jim Frischling, all with us. Also back with us, Jim Maywad.
But isn't that what the bond markets are saying? Is that we've been talking on the show about how the Fed may not move, may not be able to move. I heard last night on the show, Hillary talked about 2017, but I'm talking about this year. And isn't that why we're seeing?
No, I don't think so, because you can raise short-term rates a little bit and slowly and have a flattening of the yield curve. I wouldn't be surprised to see a 1% Fed funds rate a year from now,
Jim,
and 10 years about where they are.
What you don't understand is that Jim Frischling is our resident Fed whisperer. He understands the Fed better than anybody else on the panel. But the Fed, we're going to get Fed news later on this week, and that might change the whole dynamic, right, Jim?
Not going to change the whole dynamic, because even if they push rates a little bit, it's still going to be a very accommodating interest rate environment for equities. And again, I also think a lot of these companies have shored up their balance sheets, issued debt at different maturities, and taken advantage of these low rates. So I actually think this is a unique environment where the low rate environment is continuing to arm U.S. companies, I think, and they're a very favorable backdrop for them.
They've taken huge advantage of interest rates at this level.
I think accommodative is the kindest way we can talk about their central bank. I respect it. It's a really nice way of describing. If we think our central bank has taken some action in China, I mean, yes, they lowered rates. They're moving money around in ways that I think we can keep I think they can keep 7% growth for a little while. But talk about kicking the can down the road. They're ghost cities. They are addicted to debt in a tremendous way.
What do you think, Jim?
I went with Baidu.
Really?
I know, the Google of the Far East, but the fact is they're making huge investments in mobile. They're transitioning to Jim A's point here, Awad's point. It's going to be more about the domestic consumer, and I think Baidu's going to benefit from that. And by the way, just because I have a certain mistrust, or rather I believe the central bank has taken actions, they got money and they got population. Those are very important things, and you can make money in China.
I like the action of Baidu, too. When they reported, the stock was down like $13, and then the next day it came right back. I sold Baidu so early. I was on that stock like 10 years ago. It has been nothing but a juggernaut.
Revenue growth was great, but the market was unimpressed because the margins are being squeezed.
All right, guys. Consolidation keeps going, you think, Jim?
I think it does. And then the only thing I would have loved to have asked Glenn is, I'm not so sure, the enemy of your enemy is your friend. And in terms of talking about Saudi, I think an unintended consequence of what Saudi's doing is having to cut back some production. But I particularly think it's against Iran and against Russia. But consolidation, and I like Exxon. I wish they had a higher dividend, but I think they're going to be.
I tell you what, Glenn is still with us, and we've got 10 seconds. Could you answer that whole thing about your enemy being your friend from a geopolitical point of view, how this is playing out?
Absolutely. Saudi Arabia has to make decisions based on international relationships, and you just referenced one with Iran, and we're in a global market, but the United States, with the supply capacity we have and our fracturing capability, we are the new swing producer, and we can set the stage. We need smart policy.
All right, we'll leave it on that note. Smart policy from a smart guy who's been around. Glenn, hey, thanks for taking the time. We appreciate it.
Great to be with you, Charles.
I was going to ask Danny about it, but her earrings cost more than the entire store inventory, so I don't think she's ever been to a Jared.
I don't think Danny's a Jared type of woman.
But this is a Main Street Fox Business Network audience kind of stock.
And we talked about it earlier in the show. They've got their financial house in order. The balance sheet is strong, reasonable debt levels, great revenue growth, and I think that's making up for the kind of the concerns about maybe the lack of income growth that they're having. But again, great revenue, great debt. Very good, strong financial situation. I do like it.
Jim?
I went Google. They're going to get there as early as anybody. And again, I know it's a safe play on my part, but they're spending money and they're going to get there.
They're going to have to work on the design, though. I mean, right now it looks like Herbie the Love Bug, but all gutted out. Jim?
I know we're at the tail end of earnings season, but hotels galore, Hilton, Hyatt, Marriott, and Walmart tomorrow on the earnings front. So I'm still watching this.
Walmart beats?
Walmart, yes, I'm going with the beat.